Hi, everybody. Welcome to the Path to Profit podcast. If you're joining me for the first time, my name is Bobby, and as I do every single week, breaking down everything that went on in the overall market to get you ready to trade for next week. So, without further ado, it's time for the Rapid Review. All right. As always, timestamps down in the description. Make sure you stay tuned to the very end where I give my 0 through 10 rating on this market. All right, let's get started with the current state of the market. Market direction, we are in a uptrend under pressure. We started this way last week, remained this way all through this week. And distribution days, we're at 4 distribution days in the S&P, 5 distribution days on the NASDAQ. We gained 2 on each index this week, and we'll show those in the distribution day tracker in the next slide. Days in this trend, I consider this still part of the uptrend. We are in 28 days. So let's look at the distribution days and distribution day tracker. Starting to stack up. Definitely a high amount of distribution. In terms of, distribution days that could possibly fall off, the big one to look at, April 5th. That one is going to drop off due to time. Once we get 25 trading days from that distribution day, we do lose it. So we're going to lose that one this week, but nothing else due to time. Anything else we're going to lose, we got to get 5% above the close of that distribution day, which is possible if we do have a strong week, if we do break out higher. And we'll look at that when we look at the actual index charts. But definitely a heavy amount of distribution in the market currently, so be cautious. Moving averages, we're still green on all these moving averages. We did break below them, and we'll look at those in a second, but we are still green on every single one of these moving averages. Technically, we're at the 10-day on the Dow, but overall, still green. For the week, the S&P was down 0.8%. NASDAQ was down 0.07%. Sorry, NASDAQ was up 0.07%. And the Dow was down 1.24%, which leaves us at the year for 2023. The S&P is up 7.73%. NASDAQ leading out the year up 16.9%. And the Dow up 1.59%. So let's jump over to the indexes on Thinkorswim. And we'll start off by taking a look at the NASDAQ. Let me jump over to that first. All right. Every single week, we have been talking about sideways action, sideways action, sideways action. And we are still having that choppy sideways action. First half of the week, you just see is kind of pummeling all the way down. Did not break the low of the prior week. Did not get near the 50-day, which was a positive sign that we're kind of, in the short term, maybe making higher lows. But we did not break above this week. We've been talking about this for a long time. We've been talking about this all the way back since February, breaking above that June 2022 high. So that's a real big area to keep an eye on. I think right now it's very, very, very simple. That 12,316 price level on the up and the 50-day on the down. Keep an eye on both of those levels. Breaking below those levels, below the 50-day, is going to say, chances are we might be breaking lower. Going above this 12,316 area, chances are we're going to be going higher. So as frustrating as this is, just be patient. The market will eventually break in a certain direction and give us a sign. But be conscious, when we're in this sideways action, you can get really, really chopped up. It could be death by 1,000 cuts, even if you're cutting your losses. So definitely be patient. We're going to jump over to the S&P. Actually, first I'll show you the weekly. So you can see that clear on the sideways action there. But there was that big downtrend that we had. And looks like we're still trying to get through, get higher. And then here you have the S&P, very, very similar, remaining above the 50. Still for the S&P, at 4,176 price level on the upside. So basically identical in terms of what we're looking at on the S&P versus the NASDAQ. And there you have the weekly. So that's all we have for the indexes. Let's jump over, take a look at some industry group stuff. All right, industry groups, we're going to look at top 10, bottom 10 weekly performers, biggest jumps and falls in the ranking, and we'll go through the top 20 industry groups, and we get to the top 10. be looking at some leading CANSLIM stocks in that group. All right. Top 10 weekly performers up on the screen. Computer hardware peripherals making that big 14.13% jump. We're going to be talking about that a little bit more later. Other than that, no trends that we're seeing here. Bottom 10 weekly performers. You can see some of the NASDAQ computer stocks getting hit, banks getting hit. Other than that, nothing else to kind of note on here. Biggest weekly rank jumps up 67 spots. Computer software security. Definitely pay attention to that one. I think there's a lot of companies changing the way we work, live, and play. We all know in today's day and age how important software security is. So a group like this is a group that I like to pay attention to. When something like this happens where it pops up, on one of these lists, it kind of perks my ears up and makes me want to pay attention. So that's a group to kind of focus on. Other than that, nothing else I really want to kind of hit on. And then the biggest weekly rank falls. The big thing to note here is seeing that the oil and gas industry groups tend to be dropping, falling further down in terms of relative strength. So I think that's something to definitely take note of. All right, we'll start with the top 20 through 11 groups. You can see those on the screen. Still, same as last week, we're getting a lot of rotation. We're starting to see a lot of groups getting out of the top 20 and a lot of groups popping into the top 20. There you can see medical biomed and biotech jumping in there, beverages non-alcoholic, computer software financial, building, mobile, manufacturing, RV, all these groups making their way into the top 20. So interesting to see that there. In terms of what dropped out of the top 10, you can see cosmetic personal care, group we've been talking about for a while. ELF was the one group, one stock that I think a lot of us were talking about in that group. Well, that group in and of itself is dropped out of the top 10. And then leisure travel and booking, another one of these groups that we've been talking about consistently every single week in the top 10, dropping out of the top 10, going into the top 20. All right, so we're going to go into the top 10 industry groups. All the stocks listed will be with the criteria you see on the screen, Campos Composite. And anything highlighted is considered actionable or possibly in a base. So let's jump over to MarketSmith. And let's get started with number 10. So number 10, we have Computer Software Specialty Enterprises. This was 29 last week, making another big jump, going in straight out of the top 20 into the top 10. So interesting to see that here. This is VMware, Team, a lot of these big enterprise softwares that have a very, very specific thing that they do for businesses. This group making its big, big move. It's still got a lot of overhead resistance, so take note of that. But overall, this group looking pretty good. And in terms of stocks in that group, you can see them on the screen, a couple to mention. All right, number 9, we got apparel, shoes, and related manufacturing. The big stock that's been talked about a lot here is On Holding. Running shoes, getting very, very popular. And Crocs is always talked about in this group as well. But big fan of Deckers, which is the Hoka One. Well, it used to be called Hoka One, but now it's called Hoka, the holding company for Hoka. So interesting to see that there. Looks like this is kind of forming a base and could possibly be breaking out. So take note of that. But overall, this was down for the week. So take note of that. And I'll show you guys on the daily. Actually, normally I like to show that so you can see a little bit better what's going on. And stocks, there you go. Stocks in the group. Nike, the only one that I would say is possibly actionable. All right, number 8. We got telecommunications, cable, satellite, and equipment. This was 15 jumping into the top 10 at number 8 this week. Really, really strong move on Friday and Thursday. You can see that the RS line just rocking it up. Was in the downtrend. Now looks like it's trying to hopefully break out to new highs, both on the price and on the relative strength. So take note of that. And only one stock to mention there. All right, number 7, we have, same as last week, number 7, leisure gaming and equipment. This is a lot of those gambling stocks. DraftKings had a really, really big move this week. So pretty much, I've said this every single week. This is the kind of industry that I've been paying attention for the pure fact of this online sportsbook betting is becoming very, very popular. There's a lot of these stocks that are playing in that realm, and I think it's changing the way we work, live, and play, so it's worth paying attention to. And then in terms of stocks in that group, you have those up on the screen. All right, number 6, medical products, big group. This went from 9 to 6, slightly up for the week. Overall, though, it's been kind of flat. And here we have the stocks in that group. A lot of stocks, but not that many actionable. And Dexcom, one of those stocks I think a lot of CANSLIM traders have talked about, especially going back to 2020. All right, number 5, we have computer hardware peripherals. This was the big move of the week, up 14.13%. Massive move. This is your Dell, your HP. The newer company that was talked about this year a lot was the Supermicro Computers. I actually did a video on that company. But you can see Wednesday, Thursday, Friday, massive move by this group. Real positive. RS line rocketing higher. So this group as a whole definitely looking good. And the only stock that meets the criteria is Supermicro Computer and not actionable. All right, number 4. This was 6 last week, internet and content. This is your big names, your Googles, your Meta /Facebook. And you got a lot of other like Snapchat, Pinterest, and those floating around in here as well. This group was down for the week, down to 2.18%. The group has been fairly flat, but still sitting in the top 10. I think that's one of the things you're going to start to notice is that even the groups that are flat are actually moving their way up the rankings, which tells you something. And especially when we're experiencing a sideways market like we are now, sometimes you're going to see these industry groups and you're going to say, how is this in the top 10? The group's just moving sideways. Sometimes moving sideways is going to bring you up in terms of relative strength when a lot of other groups are moving down. So definitely take note of that. These type of groups could be coiling up. And when the market does break, we could see big movements. So this is why we're doing this every single week. And they have stocks, nothing actionable. All right, number 3, we have building, residential, and commercial. Another group we've talked a decent amount every single week. This continues to go up in a strong uptrend as it's been every single week. So not much else to add there, but tons and tons of stocks. I'm bringing that up so you can see, make it a little bit bigger. Not a ton actionable because a lot of these are extended, but this has been a group that's been performing fairly well. All right, number 2, this was 2 last week. This is the gold, silver, and gems. Talked about this last week. This is one of those groups where it's sometimes hard to pick the exact gold stock that's going to be the best performer. Sometimes it's good to just go with an ETF when you see a movement that you want to get involved in gold, silver, or gems. Big group. It looks like it's trying to break out of a kind of base. The RS line is doing fairly well as it starts to try to maintain a new high. And lots of stocks in this group. Bring them up on the screen, but a good fair share of them are extended. All right, last up, number 1, same as last week, computer software, education, media. However, it does look like this is breaking down. So the RS rating is what this is all based off in terms of rankings. But if you take a closer look, the RS line is now broken downward. The price has actually now also broken downward. Breaking below that 50 is something that normally tells you when you break below 50 that trend might be changing or kind of has changed. So this is your Spotify and Duolingo group. I think those are 2 stocks a lot of people talk about here. But I don't foresee this being in the top 10 for very long. I think as things start to catch up to it, it will probably be popping out of the top 10. All right, and no stocks in that group. So that's all we got in terms of industry groups. There's definitely been a lot of rotation. Really, in these times, it's important to stay on top of the stuff. I say this every single week. Be in step with the market. Understand what groups are doing well. Understand what groups are bucking the trend. So when this market does turn around, whenever that may be, you're going to be prepared and ready to go. All right. We have earnings up on the screen. We're still in the middle of earnings season, so a decent amount of companies. These companies are all about 85 composite rating or higher. I'm trying to show you those. There's also other companies that are reporting, even some maybe popular, more talked about names that might be reporting, but I think we're going to focus here, and you can see those on the screen. So last up, we have the stance on the market. This is the 0 through 10 rating on the market. And for this week, score has not changed. Yet another week, we're sitting at that 6.3. Look, it's sideways action. Nothing really much has changed except we gathered some distribution. which is a negative sign. But we didn't create a new low in terms of the short term. We have some clear support at the 50-day. We have some clear resistance on the upside at those price levels that we talked about. And I don't even foresee a single group or anything that I think I'm seeing tons and tons and tons of strength that makes me say, despite what the market's doing, I really, really want to buy some of these stocks. This is a market to be patient. This is a market to just continue to do the work as hard as it is. Believe me, I know it is very, very difficult to sit down, do the work, where the market doesn't seem to be producing a ton of profits. But you're better off being patient than going and trying to keep nibbling at different stocks and getting death by 1,000 cuts, because a sideways market can really, really chop you up like that. But it's also important to continue to do the work, because nobody knows when this market is going to turn around. And when it does, you want to make sure you're positioned and understand how the market's acting and know where the stocks are that you want to be purchasing so that you can make those profits, because there's a lot of money that can be made when the market starts to turn around. So I know it's tough, but hang in there, everybody. I'm right there with you. I would love to be back in a time period where there's just lots of stocks that are actionable, lots of profits to be made. But unfortunately, that's not how the market works. And this is part of the game. So that's all we got for this week. I appreciate you joining. Subscribe, turn on notifications, do this every single week. And there's some stuff, if you guys like these videos, and especially if you made it this far and you hadn't already, check out some of that stuff. I'm sure you'll enjoy it as well. So thanks for joining me. See you guys next week. Stay disciplined.